Hi everyone, welcome to the My G Trades channel. My name is Johar and welcome to another episode of Weekend Technical Analysis. So last week we ended our episode with Jyoti Labs. So starting with AARTIDRUGS this week. Alright, so looks like there has been a deep correction in this stock. From its very top, it's corrected by 60%. There doesn't seem to be any change in the trend right now. It seems to be going down in this downward channel since May onwards. So currently there is no real bullish momentum in the stock. We have to wait for this channel, for the stock to come out of this downward channel. If and when it does, it will consolidate here for a couple of months and then start its journey back up if it has to. But right now it's better to avoid this stock. Moving on to Indo-Count Industries. Here also there seems to be a very deep correction. If you look at the monthly chart, you can clearly see that from Jan onwards, 1, 2, 3, 4, 5, this is the 5th month, May, it's just been on a complete downward trajectory. And you see this big red candle here that came in the month of October. This was a sign to exit, because this candle was really large, and then there's an equally large candle, almost equally large candle in red. So this was definitely a clear sign that it was time to exit this counter. If you haven't already exited this, then now it's close to a very support zone, so you might get a better opportunity to exit at a higher level if you haven't exited already. But there's no new buying opportunity per se in this stock right now. Moving on to CEATLTD, same story here. Looks like it's consolidating in a downward channel. You can clearly see this downward trend in this stock right here. This is the channel. So let it get out of this channel. Only then we can see some new bullishness in this stock. So right now in the current market, most of the stocks are forming this sort of a downward channel, so there are very few pockets of opportunity that are currently there. Same story with VSTIND Industries. If we switch this over to a line chart, we can clearly see that there is a downward channel here as well that it's not been able to get out of, and it needs to break out above this trend line for us to see any bullishness in this stock. This is Mahindra Logistics. Again, very deep correction in the beginning, starting from the beginning of this year, and it still doesn't look like the correction is over, so better to avoid this counter right now. Moving on to Gsfc. Okay, now this is looking interesting. Alright, so we are looking at the monthly chart right now, and we can clearly see, let me turn this to a line chart. Okay, you can clearly see that this is the lifetime high resistance here, which was created back in October 2017, and the price is 159 rupees. Now let's move back to the candlestick charts, and we got a breakout in the month of March. We got a nice strong closing here above this level at 162 rupees. Then the next month it tried to go up again, but as usual, market's been pretty bad since April onwards, and it's given a closing again below this previous resistance line. So now if the price gives a closing above 172 rupees, then that would be a very nice entry point into the stock, because now our levels are clear. We know clearly that this price of 172 to 170 is going to be the next resistance. So if we can get a weekly close above this resistance level, then we can safely assume that the stock has completed its retest, pulled back to this level, and it can start moving up. And if you look at the daily chart also, if you see the daily chart, we had some nice strong green candles created near this important support zone on the daily chart. You can clearly see that on daily chart, this level of between 140 and 150 is a nice strong support for the stock in the short term, So if it can continue to stay above this and give a weekly close above 170, then that will signal the continuation of this upward channel. And we can clearly see that the stock's been in an upward channel like this, right? Let me switch over to the line chart. Yeah, so if you see on the line chart, it's clearly taken a resistance on this sort of trend line over here, and it has still not broken that trend line. So the stock is still strong. We just need to wait for it to close above 172, and then the stock will get into back into action again. Now what will be the target? The target will simply be the depth of this entire consolidation that happened here. So as you can see, from 2017 onwards, the stock was just moving like this in a downward trajectory. Then came the crash of COVID 2020. Now it's again moving up and it's retesting this level. If this level is taken out and if we get a closing above 172, so the target for us above 172 will be let's see here. All right, 65%, which is a supremely amazing target. And what will be our stop loss? Very simple. We clearly know that this level of 140 is a strong support for the stock. So let's go ahead. Where's that? Here we go. Long position. So if you were to enter here, let me remove this. So the gain is 65%. Yeah, and we can clearly see that the risk will be approximately 20%. So this is a good risk to reward ratio. Very nice strong chart indeed as well. Plus we are being very conservative and entering above 172. So definitely a strong closing above this level can continue the momentum, the bullish momentum in this stock going forward. So let's add this to our tracker. Gsfc, month is May. The date that I'm recording this on is 29th May. The price as of today is 154.15. And what have we identified? Stock in strong momentum, has taken good short-term support at 140 levels. Weekly close above 170 can continue the momentum on the upside. Has broken resistance of 2017 and is currently retesting the same. Good risk to reward ratio as well. Right, let's also go ahead and quickly take a look at the fundamentals once as well. Let's see here, Gsfc. Okay, Gujarat State Chemicals and Fertilizers. So you can see the book value is 300. That's a good sign. That's a very good sign. If you look at the sales have also been going up. March the sales have come down a little bit, but operating profit margin is high, so the net profit is highest ever. Very good sign. If you look at the sales also, they have been on a growing trajectory. That's also a good sign. If we look at the shareholding pattern, then we can see a massive interest by foreign institutional investors here. They have increased their stake by almost 3%. DIIs have pretty much remained the same, reduced a little by 1% over here, and public shareholding is going down. So this is also a very, very good sign. So fundamentally, stock looks good. Foreign institutional investors are also interested in the stock. Chart is also looking super strong. Volume is also good. So the odds of this trade working out are definitely in our favor, and the risk to reward ratio is also supreme in the stock. So if it crosses our target entry price of what is it here, 172, then we can definitely take a position in this stock. What's our target? Our target is 285. So the potential gain is 65.7%. Our stop loss is right here, 138. So the potential loss is 19.77. We are currently waiting for entry, and this is the current market price. All right, great. Now let's move over to BHARATRAS. Okay, so here also we can see, if we switch over to the monthly chart, then we can clearly see that this stock has also been in a nice momentum, right, making higher highs and lower lows. But one thing that I'm seeing here, and if we switch over to the line chart very quickly, we can sort of see a double top forming over here, right? You can see that these two tops are almost at the same level, so it's made a M sort of a pattern. So if there is a breakdown below 96 or this 9700, then the stock will start correcting down to at least the next support level, which is out here at around 7000 levels. If that is not, if this level is taken out, then this stock will continue its upward momentum for sure. But the stock has already been on a bull run since many years now, so I'm not too sure how things will still continue moving further. So I'm going to avoid this stock, but definitely the stock is in momentum. If this level is taken out, momentum investors can probably take a trade and keep appropriate stop loss and continue to trail their profits. But if this level is taken out, then please exit the position immediately. Moving on to GPPL, which is Gujarat Pipavav Port. So no momentum here as well. This also stock is in a downtrend since 2015. It seemed to stabilize here during the COVID fall, then again went up a little bit, and now it's again back to those same levels. So no real momentum in this right now, better to avoid the stock. Moving on to Borosil Limited, this stock is also correcting. Don't see much bullish opportunity here right now. Better to avoid in the short term. Looking at TCNSBRANDS, here also we can clearly see a double top pattern forming, right? As we saw in the previous chart of BHARATRAS, we saw a double top. These two tops are almost the same. It shows like a M, and then this low has been taken out this week. The bottom of the M has been taken out, which means that this stock is going to correct further from here, and it will basically keep testing these support levels on its way down. But right now you have to clearly avoid this stock. Moving on to Craftsman Automation, it's a newly listed company, which just got listed last year in March. So we have a year's worth of chart right now. Looks like there might be a head and shoulder pattern forming here. So if we draw a neckline like so, we can see that this is the left shoulder, this is the head, and this is the right shoulder which is forming. And let's try and draw this neckline a little more higher right here. Yeah, so this is the left shoulder, this is the right this is the head, and this is the right shoulder forming right now. And if we calculate depth of the shoulder of the head, put it above here, then the target is approximately coming to 2395 points. Let's see what sort of risk to reward ratio do we get here. So gain of 23% for a risk of 12%. So not really good risk to reward ratio in my opinion. The gain is too little for the kind of risk that we are taking. But definitely it looks like there can be a head and shoulder pattern here, and it could break out and go up till this levels. There is also clear resistance here, so it could take resistance here and then go up or come down from this resistance level. So I am going to avoid the stock, but my observation is that there is a head and shoulder pattern here for a short target of 23%. It could take not more than 3 or 4 weeks for this target to get achieved. So if anyone wants to take the risk, please do the due diligence at your end and do trade if you agree that there is a head and shoulder pattern here. If not, you can avoid the stock. Moving on to Tejas Networks. So here also the stock seems to be consolidating here, and we can sort of see a short double top that formed here. That double top was taken down, then the stock corrected to its previous support level, and now it's sort of consolidating in this particular range itself. I don't really know much about this company, Tejas Networks. It has been in the news for certain things. I think it has something to do with 5G, etc. But overall, I don't see anything great in the chart right now. It is trading very close to its lifetime. It is trading at lifetime high levels. That's one thing. That's one interesting thing for sure. This high was made back in Jan 2018, and the stock has had a very long journey to come back to these levels, and it is consolidating here. So definitely, the chart is strong if it continues to consolidate at these levels. But this consolidation can go on for a pretty long time because the move has been so sharp, right? Just look at this move that came here. The stock moved up by almost 100% in a very short amount of time of just 4 weeks. So let's take a look at the fundamentals once. So we can see the sales are pretty much stagnant, nothing great here. The operating profit margins are in negative. The company is posting very huge losses and very small profits in particular quarters. If you look at the yearly numbers, these also look flat to declining. Profitability wise also, it's posted a negative net profit last year. If you look at the balance sheet, then the borrowings have significantly gone down from 2018, but and since then it's not gone up much, so that's a good thing. Fixed assets wise, the assets are also going up. That's also a good thing. If we look at the shareholding pattern, then the promoter holding has gone up to 52.45%. So let's see, has someone bought new stake? I'm not sure why it's gone up so much. If you look at FIIs, so FIIs have sold off the stock, and I'm not sure why it's showing April 2022 here. That's strange. But FIIs have been selling the stock for sure. And if we look at the public shareholding, then that is also going down. But something weird is there in the shareholding pattern. I mean, the April shareholding pattern should come out in July. So I don't know why this is already out. So that's weird. Something's wrong in this data. I don't know. But overall, the chart structure right now is still on the bullish side because it's not broken its previous low super trend support also, right? You can clearly see that the stock is still in the green super trend territory. But overall, this picture is not looking that great here. I think it can correct down, but a breakout above this will definitely put the stock back in the upward territory. But the fundamentals of the company are not that great. If this could purely be a news based driven rally, or there is some fundamental change happening in the company that we are not aware of, because there is definitely something weird happening in the shareholding pattern where the promoter stake is going up, etc. So I don't know if some new promoters are coming in and they're going to turn around the stock. So I'm going to avoid this until I have more clarity on what's exactly happening in this company. There definitely seems to be some upward interest going on here, but that is something that we are just not aware of at this point. So moving on to Gujarat Alkalis. Okay, so you can clearly see here that I have drawn a line here, and this is the resistance of Jan 2018, and there was a breakout that happened back in March, and after that breakout the stock has corrected back to the same levels. Now something interesting happening here is that there was a very strong bearish candle, and then from the same level we saw a strong bullish candle which gave a closing above this, and now we are again seeing a pretty large bearish candle. It's not a candle that has completely covered this green candle, but definitely something, this entire formation here definitely looks interesting. And if you look at the volume wise also, this candle has a very large volume. Now let's switch over to the daily chart, and we can clearly see that we had some pullback in the last 2 days, last week. So this level should act as a strong support out here, but if we get a closing, a weekly closing above 999, then we can continue holding the stock for the target of 1565 points. So now what is the risk to reward ratio here? Let's take a quick look at that. Okay, so from here, pull up here, so that's a gain of again close to 58%, and our risk is going to be pretty high over here. So because our levels are clear, we know that this level, this strong bullish candle that started from here, should act as a strong support. So the risk is 25% for a gain of 58%. So this can potentially be again a good trade. Risk to reward ratio is 1:2. It has a nice strong weekly chart, but let it give a closing above 990, and only then we can enter into this trade, because this entire formation here looks a little weird to me. I'm not sure if the stock will further correct, but if we get a closing above this, then definitely it would be worth entering into. So noting this down as well in our tracker. See here. Right, the price as of today is 799.00. Breakout above resistance of 2018. Currently retesting those levels. Chart looks in strong momentum. Okay, so what's going to be our target entry price? It's going to be, let's see here, 990. What is going to be our target? It is going to be this level of 1579. A gain of 59%. What's going to be our stop loss? So stop loss is going to be right here, 741. Potential loss of 25%. We are currently waiting for entry, and that's the current price right there. Okay, moving on to let's see why my formatting is not working. There we go. Okay, moving on to the next chart, which is La Opala. All right, you can clearly see deep correction going on in the stock. Went up to, so there was a rounding bottom formation that happened here, right? A a clear rounding formation happened here. The breakout came at these levels, moved up, and now the stock has corrected very deeply. So better to avoid the stock. Nothing really great happening here. Moving on to Cochin Shipyard, the stock is also in a downward trajectory. Nothing further to discuss. Jindal Worldwide, you can clearly see it's broken this very important support here. So now this is definitely a sign to sell the stock. It moved up also extremely strongly during the bull run. Now I think the stock can come down back to these levels of 180, 190 rupees. So better to avoid the stock right now. Vakrangi trading all the way at bottom levels. You can clearly see that I've already drawn a rectangle here where it's been consolidating in this range of 65 points and between 18 since the year of 2018, since May 2018. So this is like a 4-year consolidation that is still going on. So better to avoid this stock as well. If we look at Welspun Corp, then you can clearly see I have drawn a resistance line here, which was taken out last week. In the 3rd week of May, we saw very large, strong green bullish candle. The stock moved up by 37%, and now it's retesting those levels again. The bearish candle is also pretty large, but it's not engulfed this. And we saw a decent pullback happening in, I think, the last 2 days as well. Now, very simply, if this level is broken, the low of the green candle is taken out, then the stock will become weak again. But let's see what our target would come like if the stock were to move, give a closing back above the resistance line. Okay. So there we go. Alright, so the target is 398 points, and if we are to take a long position over here, then from these levels, right, so the gain is 75% from the resistance line, and the loss will be somewhere about 21%. Okay, now I would like to be a little more safe over here because the market's just that bad, right? So I'm going to move up my target entry price here to 247. It's okay if we get a little less profit. So in that case, then the gain becomes 60%, and for me, then the stop loss will come over here at this level right here. So if this level is taken out, then we will exit the position. Right, so a loss of close to 20% for a gain of 60%. Not bad odds at all. So let's go ahead and add this to our tracker. Well Corp, month is May 29th May. The price as of today is 206.25. So what have we seen? A large bullish weekly close above resistance, above lifetime high resistance. Resistance currently retesting the level again. Let's also take a quick look at the fundamentals once of the company. So debt is at 46%. So debt is a little on the higher side, not a great sign. But let's look at the quarterly results. So quarterly results wise, we can see that in 2020 the stock, the results weren't that great compared to 2019. I'm guessing that's because the demand went down because of COVID. Operating profit margin has also significantly reduced over the last 2 quarters. That's also not a really great sign, but we can see that the profit is highest ever, and we can see there's some other income of 415 crores here, which I'm not sure what it is. If you look at sales, then yeah, we can clearly see that the last 2 years have not been great for the company. Could be because of COVID, not sure. Operating profit margins are at 7%, so the company has seen these margins before also, back in 2018, 2019. But the net profit is again highest ever, again largely because there is some other income of 551 crores in this case. If you look at the balance sheet here, then we can see that the borrowings are going down. They had gone down pretty significantly in 2021, but they've gone up again in 2022. So not sure why again. If we look at the shareholding pattern, then we can see promoters are holding at 50%. FIIs are holding, are selling the stock. In fact, over the last 2 quarters, it's gone up marginally by close to 1%. In this quarter, let's see who bought it. We can't see that. If you look at the domestic institutions, they are buying up more. If you look at the public holding, then public holding is going down, and I don't see any large public, well-known large public investor over here. So chart is definitely looking promising. Fundamentally, the company is a little on the weaker side in my opinion. It's okay, it's not that great fundamentally. And also I just spotted that there is this, if you look at the monthly chart, then there is this resistance already here at 270 levels as well, where we can clearly see the stock tried to reach those levels almost, and it corrected from here. So now the stock isn't really looking that great to me, but technically the stock is very strong, so it's a little hard to ignore. So this is the problem with the market, sometimes the greed sometimes just takes you over. But see, it's our call if you want to take the risk or not. There's something definitely cooking in the stock because the volumes are pretty huge. These candles are also pretty huge, but fundamentally the stock is not that great. So I think I'm going to avoid the stock. But hey, the idea has been discussed here on the channel. If you want to take that risk, then please do your own due diligence and do that. These are all just my own personal opinions. But right now I don't see, fundamentally the stock is pretty weak. It has a high amount of borrowings as well. So if these interest rates keep going up, so it's going to be more difficult to finance those kind of loans. So that can become a problem in the future for the company. So I think it's better to avoid this stock right now. So I'm going to go ahead and remove this from our watch list. Moving on to Shilpa Medicare, don't see much action here as well. It's sort of made a rounding top here and it's corrected. There is some good volume action that happened last week, but it needs to cross some important level, preferably this level of 500, to really see some move in the stock. Because what I can see here is sort of a double bottom formation. So this is one bottom right here, moved up, made a second bottom right here, and if it breaks out from this bottom, then the target would be the next resistance, which would be somewhere between 650 and 600 levels. So this entire zone will become the next target. So that's the view on Shilpa Medicare. Looking at R Power, okay. So here also something interesting is definitely going on. Huge volume build up here, moved up very fast above these levels, and now it is sort of consolidating above this range, right? It's consolidating here above this. Now if this low is taken out, then definitely you will see a downfall back to 5 rupee levels. But unless it's above this level, the stock is in its bullish momentum here. So if you already have it, you can continue holding on to it. You have to keep this as your final stop loss, but I would prefer not to enter into this kind of stock in the current market situation. Looking at Jsw Holdings, then this stock is also corrected. It's coming down. I think it will come down to these levels, which was the previous resistance here, and it has already actually come down till here and taken support. So if this level is broken, we will see further pain. If not, it will consolidate at this level for a couple of weeks or months. Looking at TCBL, then this stock is also in a downward sort of a channel. Don't really see any bullish momentum in this stock right now, so better to avoid this. Looking at Wokhart, this is also trading at rock bottom levels. No real reason why we should further discuss this stock. IFB Industries also in a downward channel, in a downward side, negative side, so better to avoid the stock as well. Don't really see any reason why we should enter into the stock. Looking at Jindal Poly, so this stock, it looks like it's been consolidating for quite a while at these levels. If you look at the monthly chart, then we can clearly see that it's been consolidating in this price range. Let me draw a rectangle here very quickly. So the line chart is okay. Alright, so if you look at the line chart, actually the picture looks a little better. Alright, it's making higher highs and higher lows, right? And this looks like the trend line. So we are looking at the monthly line chart for Jindal Poly, and we can clearly see the trend, right? Higher highs that's making here and lower lows, so definitely a good sign. So candles, the lows of the candles are definitely moving up, and it's trying to stay very strongly above this level. Just look at this pullback that came in. Let's look at a shorter time frame here. Yeah, if you look at the daily chart, just look at the strength of this candle here. A huge 20% move, like stock hit upper circuit with good volume over here. However, it has not been able to close above our trend line here, so let's hope it does. But if it does close above the trend line, then definitely this stock can continue its upward momentum slowly and steadily. So something is definitely going on in the stock. If you are a momentum trader, you can consider entering into the stock if it gives a closing above this trend line that I've just drawn here. So any close above 114, 113, you can consider entering into this stock. As of now, what targets can we expect? I'm not sure. I don't see any particular pattern that can help me to calculate the target. So if you're a momentum trader, you can definitely keep this on your watch list. This is looking very strong compared to the market. Now looking at responsive industries. Alright, so this chart is pretty weird. Just look at this. It made this high in Jan 2021, then a very steep correction till December or till November 2021, then a huge up move in just 1 month of 63%, and then the next month 17%, again came and took resistance at the same levels, and now it has again come down. So we can clearly see that it's formed a double top pattern here. So this is the double top pattern that we can clearly identify. If you look at the line chart, it'll look a little more clearer. So these tops are almost at the same level, and we can clearly see that it's made a sort of a M formation is what it's planning to make. Maybe it can make that. So if it comes down here and if it breaks this level, the low of the M, then you will see the stock fall down to possibly 42 rupees levels, which was the price back in 2018. Now what does this company do? I have no idea. This is the first time I am seeing this chart myself. Responsive Industries. Let's try and see. So it's a manufacturer of polyvinyl chloride based products. Okay, what are those? What is a polyvinyl chloride product? Place in English. Okay. Alright, so it looks like it makes flooring, vinyl flooring. That's good. Let's take a quick look at the, oh my god, what is this? It's trading at a PE of 3000. Wait a minute. It's trading at a PE of 3,66,738. There is something really weird about this stock for sure. 100% weird. Just look at the PE. These guys mad? I don't know if there's something wrong with Screener or if it is actually trading at these valuations. But if you look at the quarterly results, the quarterly results are actually pretty good, right? It's growing. Just look at the last 3 quarters, consistently growing in revenue, margins going down for sure. Could be because of the inflationary pressures. Profitability wise hasn't been stable. Some quarters posting profit, some quarters posting loss, and that too there's no consistency in the profitability. Some months some quarters the profit is 8 crore. Here it has all of a sudden jumped to 16 crore. So profitability wise it's a little unstable. And if you look at the yearly numbers, then yearly numbers show a different picture, right? Quarterly we are seeing growth over the last couple of quarters, but if you look at the yearly numbers, the business has actually gone down up till in between 2013 and 17. The sales were above 2,000 crores, and from 2018 onwards the sales have gone down to just 1,000 crore levels. And same thing profitability wise, there's like zero profit that the company has posted last year. If you look at the balance sheet, the borrowings have come down, which is a good sign. If we look at the shareholding pattern, then foreign institutional holding is the same, close to around 5%. Domestic institutional holding is also close to about 3.6%. Public holding is at 41%. Again, very, very stable. So nothing really happening in the shareholding pattern as well. Fundamentally also company is weak. Chart pattern also looks very, very weird. PE valuation is showing at 3,66,000. So not really sure about the numbers in this company. So better to just stay away from the stock and keep your risk very limited in the kind of market that we are right now. Deepak Fertilizers. So here we can clearly see a resistance of 490 levels, which was taken out back in Jan 2022. So just 4 months back. Then we saw it go up to 600 levels. Then it corrected and retested these levels again. Then moved up to 700 levels. Then it again came down back close to the resistance level, and now it's again starting to move back up. So definitely the chart is really, really, really strong. Even if I put the super trend here, we can clearly see that it's never broken the super trend support as of now. So now very simply we are going to use our depth range calculation method that we normally do to calculate the target. So this was the bottom of the downward range. This is the previous resistance. And if you put this up right here, let me zoom in on the chart a little bit. All right, let's put this down. Okay, so we can clearly see that the next target as per the range calculation comes to about 930 levels, and the price is currently at 638. Let's put the long position out here. Let's see what levels we can get. So if we were to buy this at the current price, then the gain is 45%, and the potential loss is 19%. Now definitely this level right here has established itself as a very, very strong support, right? We bring it down till here, then the loss comes to 22%. Okay, so definitely this level is to be watched out for. So we can keep the stop loss here at 500 points, because below this it will fall down below the previous lifetime resistance as well, plus it will go below the strong support which has established right here. Now for me the real game would begin only if we can close above this level, to be honest, because the market is so bad right now. my risk appetite has really gone down. And if you look at the monthly chart, we can clearly see a nice pullback that has happened in the month of May actually. So I think we can probably take some risk with this stock instead of being risk averse. So let's bring it down back here. Market's really confusing, and testing the patience and testing the limits of my strategy as well. But we have to continue, carry on, see what works, see what doesn't work. 2 years later, if we see that these trades worked, then that would be confirmation that no matter how bad the market is, if the price is telling you something and the fundamentals of the company are good, then it is definitely worth continuing to invest in the market, even if the situation is too bad. So now in this case, we are seeing here that the potential gain from this level, from the current level, is 46%, and the stop loss is 20.84%. This looks like a good risk to reward ratio to me. The chart is also pretty strong, not corrected much like the market has or other stocks have, and it looks like all the fertilizer stocks seem to be holding up well, because the government is doing some sort of subsidy to sort of help farmers to buy fertilizer at the same price that they were buying before. So they are basically absorbing a lot of the inflationary pressures to ensure that farmers continue to get their fertilizers. So I think that is not going to impact fertilizer sales for these companies, which is why I think they will continue to make good money, even though there are so many inflationary pressures happening right now. So consolidating at lifetime high levels. Consolidating at lifetime high levels. Stock in strong momentum. Fertilizer demand to continue as government is subsidizing the cost for the same. Alright, so now let's correct the spelling here. Subsidizing. Not sure if the spelling is correct, but who cares as long as people make money. So now the target entry price, we are going to keep it the same as it is today. So 638.25. Hopefully we try and get it at this level itself. The stop loss will be at 500 rupees levels. So potential gain of sorry. The target is right here, 935. Okay, target here 935. So a gain of 46%. What is the stop loss? The stop loss is going to be 500. Potential loss of 21%. This trade is currently active, and this is the current market price. Alright, so I think we have found pretty good enough trades today in 48 minutes. We found 3 trades. All these 3 trades have the potential to give a return of 40% and above, which is good. If these trades do work out and if we can see these levels hit in the next 1 year, that would be the best thing that could happen. But let's see how it goes. A lot of the trades are hitting stop loss, and there's no choice but to exit those positions, because the market can continue on a downward trajectory. So better to stay safe and stick to only fundamentally strong stocks. But we have to continue tracking what's happening in the market, and let's see if these trade ideas work or not. So hope you enjoyed watching this video. Hope you got to learn something. Goodbye and have a safe day.